let's do some trading. Alan Nuckman's with us this morning. He's the chief market strategist at bullseyeoption.com. First broad market. Alan, you know the routine here. Are you feeling any worry about your S&P 6K? Isn't that what you're looking for? Well, we got to make sure you're not muted. Hit that unmute button, Mr. Nuckman, or maybe we got to hit our unmute button. All right. Well, I know Alan's trading some energy stocks this morning, but he has been probably the preeminent bull on our show, so I want to know if he's fazed by anything that happened last week. Let's take a look at where we are right now. The dollar's up about 11 bips. Bonds still getting slammed by 1%, but stocks are holding in. All right, Alan, I got you. Okay, so equities are holding on here, Alan, or is the bond market going to break us? What do you think?
Well, I'm very impressed by the market action, obviously. Sometimes it's equally as important as what doesn't happen as what did happen. And the reaction is pretty positive. We had a bit of a reversal on Friday, some profit taking in gold. But oil being down, these are still strong trends. I think these are just opportunities. And it all comes back to commodities, as you saw with the Goldman Sachs number. They made a lot of money in these commodities markets here in the last quarter, and they had their $4 billion in profit that you can lump on with the JP Morgan that made $13 billion. So banks are still banking it.
It's all right. Well, now I'm angry I didn't come up with that. Okay, too easy. All right, so, but hold on, Alan. You're in NOV. So what's up with that? How come you're going there for the trade this morning this is like global energy?
Yeah, and again, over the past few weeks and months, you notice that there's been a shift. I've been looking at the risk reward in Chinese stocks, and also the risk reward is still there in energy stocks. We took profit on Friday in Oxy. The Oxy play had a 100% gain, a modest move in the stock, actually a pretty good move in the stock. So that's the way we like to play. It's about risk reward, and this is a stock that's got a PE of 12. So it's got, some good value. And it is about 20% off its 2023 top.
Okay. Still though, kind of trending lower if I look at the high. So you need a breakout. Right. You need right?
Well, that's what I'm looking for. This is a stock that's traded between 15 and 25 for the last 2 years. So 20 is that midpoint pivot. If it pops above that 20 level, that projects move to the 25 range top, which this position would do very well based upon the math of these in the money options. So I'm looking at here is a 17 call, an August 17 call has 4 months of time. 17 calls, 250 in the money is trading for about 350. And it's only $25 more to buy the extra month of time. So, when in doubt, buy more time to be right. And it's got a delta of near 80. So it's going to have a nice payoff. When we get back to that 25 level, which again is just the year range top, I'm not even asking for a breakout. If we get to that 25 level, the option gains 100%. So it's about the math.
Okay. So in the money and by a couple bucks. So long as it doesn't, crash, you got some breathing room here. And you got some time, too. 4 months.
Right. That's the combination. You want to have time and you want to be in the money. You want to have the right to be buying at a discounted level. And if we look at crude oil, I know Ben had a lot of ifs.
Yeah, that's what I was going to ask.
Crude oil, we projected that to get to 105. It traded between 65 and 85, a breakout of that 85. Now targets 105, a $20 move on that top. Now, let's put in perspective. Now, gold's at all-time highs, right? Crude oil right now, if you adjust the price for inflation, is nowhere near. We'd have to get to 197 if you adjust the all-time high of 149 for inflation, we'd have to get to 197 to be at the all-time highs there. So we're not even at the halfway point. I know it's a red button issue for people to be paying more at the gas pump, but like you said, those are strong trends, and it's because the economy is so strong, okay? Don't discount that. That's a positive where I come from. My optimism wins.
Okay. What if we get a new high in the 2-year yield and suddenly we're talking hikes, Alan? Isn't that like the final boss for everything?
High. How high is it? Now, youngsters don't remember mortgages used to be 8, 10, 12, 14%.
The good thing is, Alan, the youngsters, we can look at these charts. You see, we have these things called charts, and they stretch time. We can go back
look at them.
And we could go, I wasn't here, but I see that the yield was here.
Okay, these are called normalization of rates. You got spoiled. You kids got spoiled on free money. Okay, these are called normalization of rates. And look at the market. It's not me. It's the market. What does the market tell us? The market's saying it's okay.
Is
The
that
market
Alan
says it's
Nuttman
okay.
saying stocks will be at highs even if the 2-year does? Is that what I'm hearing?
That's what I'm hearing right now,
Okay.
because that's not a straight thing. If you
All
look
right, I
up
got
to
you down.
September,
I got you down on paper.
There's a 70% chance of a cut in September. And yeah, because stocks may have a profit-taking pullback, but a sustained turn because we hit 5, 0. No, not me.
All right, you're on the books. But for now, trading NOV with the
Thank
in the
you.
money call. All right, thanks, Alan Nuttman. All right, but we got that on the books there for Mr. Nuttman. Stocks won't be bothered by a 2-year high. But, as he said, there could be a pullback. All right, coming up. Let's go back to healthcare and let's find the stuff that's working. Earlier we talked about the trades that haven't been working in the sector, insurance, UNH, and J&J. But when it comes to breakthrough drugs, especially weight loss,